This is what I wish I knew before I started trading. Now looking at the chart, we see we have SPY up. So I wanted to walk through this entire day of movement. We can see that it's very bullish. Now for any kind of trader, every trader trades very differently. People have very different styles, different strategies, and the reason for entering a trade can be very different. There's a lot of different terminologies for different strategies. When you're looking at a trade, you may be entering because maybe a fair value gap, Fibonacci retracement, a pullback, a break and retest. These are all different names people will use, but honestly, essentially, it could be the same thing we're looking at. What we're really doing when we're trading is all we want to do is we want to see where price is headed and to enter in that direction. So we're all trading the same. We're basically looking at where are the buyers and where are the sellers. If we know exactly where the bulls and bears are, that can allow us to determine where the strength is to trade in that direction. Looking at SPY, it's very bullish. So right here, I just wanted to show you guys that we can see that there's a lot of strength at open. Price opened up at 9:30 a.m. We see a very strong push. And over here, you may see a certain type of entry right there. Typically, I usually enter based on a pullback. Once I see strength in the market, I like to enter once price pulls back a little and then enter for that continued direction upward. Now, someone else may trade the same thing but may have a different name for it. So I just wanted to go through basically 3 different things that you may use, but we're all trading basically in the same direction. Looking right here on the 2-minute chart, what I see from my personal strategy is that price is very bullish. What I like to see at open is that price shows a lot of strength, showing that there is a trend direction. Then all I have to do is enter on that trend once I see a pullback. So a pullback is basically when price comes down a little, it dips down, creating a little bit of market structure. And then once price pushes up again, you enter in that trade to continue that bullish trend. So where I would personally enter is something around this area where price is curling higher. As I see bullish strength continue, I will enter that position. So this is more of a pullback entry. Now someone else may have a different thing that they may see. So what you see here is that price went down. So someone else may see a trend line. So drawing a trend line may be coming down here. We see that price is connecting from the very highest wick of this candle all the way down. It's touching 3 candlesticks. So perhaps a 3-touch trend line where price pushes down, and then once price breaks a trend line, you enter a trade. So the same type of entry I saw where price is pulling back, someone may see a trend line and then enter based on a trend line break. Another thing is that depending on what time frame you use, you may see a different entry. So based on using the 2-minute, this is what you see, but if you go to maybe a 5-minute chart, you may see something different. But really everything you see on different time frames is going to basically be the same direction. It just shows less candlesticks or more candlesticks. So on this 5-minute chart, what you may see is that price is creating a fair value gap. So a fair value gap is basically when price pushes up and you can see an area where price comes back into an area. So right here, if you trade those type of fair value gaps, this is the fair value gap that price creates. There is no movement on the left side and the right side. Then basically you connect this whole area showing that this is a gap. Price pushes away, comes back inside the gap, and then rejects it to go higher. Another thing you may see is that as it's coming down to touch this gap, we see a bullish candlestick pattern. Right here we see this red candlestick, and then we have a bigger bullish candlestick. This candlestick is engulfing the entire body of the first candlestick, so this could also be a signal for you to enter on that confirmation upward. So this is another reason to enter a trade. So depending on which time frame you use, there can be a different strategy or different reasoning for entering on that move upward. Now another thing is that you may see something else, perhaps here. So we can see from the previous day, this is that pre-market high. So pre-market high is a very important area because that shows where price came up to during the overnight movement, basically before the market opened. This is a pre-market high movement, which I usually mark with a green dotted line. And then you can also see the previous day movement is right here. So this is the previous day high, which I usually mark as a solid green line. What you can see from here is that price is breaking a previous day range. Whenever price breaks a previous day range, that is a very good signal that if we have strength upward, a close above the level, and continuation upward, that shows a nice breakout of a strong level. Also, this whole area, remember this area, so this is a very strong, short-term resistance. If we go to the 1 hour time frame, this at the time was all-time highs. So we can see that this is a stronger resistance overall. And this breakout here that happened is basically breaking out of this very strong resistance, this all-time high level. So that may also be another reason you enter a trade. You may be that breakout trader, and based on price breaking to all-time highs, this is the reason you enter your trade. So this could be another reason where you say it's a breakout of a level, I will enter my position. This whole area of entry, there are different type of traders, different strategies, but we're all looking at the same thing. We all see that price is going higher. So what do we want to do? We want to trade in that direction. I would say that for any kind of trades or any strategy, there's a lot of different fancy terminologies and a lot of different words being thrown out, but essentially we're all looking at the same type of movement, and what we want to do is trade in that direction. Depending on what strategy you use, you may be entering a trade earlier than someone who's perhaps using another strategy where they may enter later in the trend. So depending on what you feel comfortable with, or what is a higher probability setup for you, or what you see to be working out always or having a higher win rate, I would say to use that strategy that works for you. Every trader trades very differently, but essentially we're all looking at the same thing and trading with that trend. When you're looking at a chart next time and you're deciding which strategy should you be using for this trade, or should you be using in this scenario, what you want to see is that based on prior experience, what has worked in your favor. Based on the bigger picture, what is the overall trend? Are we at all-time highs? Are we at a stronger support resistance? Is price breaking a previous day range? You just want to be aware of a lot of all these key levels, because when there is a lot of key levels, likely price is going to have some kind of reaction. Sometimes price is very strong, it blows right through certain areas, but typically if you do see certain key levels like this, that is a very good area to watch out for. And depending on how you like to trade in that area, there could be a lot of good setups right there. Either ways, when there is a lot of volume in a stock, or there's an area where there's a lot of buying and selling happening, this is an area of interest where a lot more people will be interested in entering the market, or even exiting based on where they entered prior. So you just want to watch out for these areas, because these are good areas for trades. These are when more people are involved in the market. So likely if you're in it and you pick the right direction, you're trading in the correct direction, your trade can have a higher upside to working out. And then usually there is a higher probability of price moving very strong and breaking out of certain levels. So whatever you see on the chart, just put everything together that you understand from trading. It's all price action. It's basically detecting what level should be broken, what do we see overall, what's the trend, and then entering in that direction. Based on the overall analysis, just look at all the different things that you've learned, put it together, and I would just focus on really just understanding whether this is an area of more buying, more selling, and then enter in that direction.